As far as what you could focus on, when it comes to myself, I've always made sure to live below my means, save as much money as I can, invest consistently long-term, and work diligently throughout the day so that way I'm not wasting time. I believe that those habits have a much greater impact on our day-to-day lives that all of us can directly control immediately. Now, the biggest change to what we currently have now would be what's called a blue wave, which is where the Democrats take the majority of the House, the Senate, and the presidency. And that means the likelihood of enacting certain bills becomes extremely likely, including the proposed tax increase. Some argue that a blue wave would give room for a much larger stimulus package, which would then boost up our economy. Others say this would increase taxes and impose stricter regulation on business at a time where already our economy is really fragile. Regardless of this, though, the stock market is impacted by the current election status because this is so far what's happening. But as of right now, the House of Representatives is almost evenly split between Democrat and Republican, with the Democrats holding a very slight edge. Now, from an investment standpoint, this could actually be a good thing because any measures would need bipartisan support to pass through, which means that both sides would need to come to an agreement to get to the next step, and as it is right now, it's pretty balanced. Now, after that, we have the Senate, and this one was a little less clear because some of it is a bit up in the air right now, but previously it was a bit favoring the Republican side. Now, this one is not entirely confirmed because the Senate has to reach 51 to hit the majority, and as of right now, Georgia is still a bit up in the air. But the stock market looks to be pricing in that most likely the Republicans will be retaining control of the Senate, which means that most likely we'll have the same status quo in terms of tax policies and regulation. Because of that, with a divided Congress like this, it's unlikely that we'll see higher taxes, strict business regulation, and higher capital gains tax, which was weighing on investors who couldn't plan for that uncertainty. Remember, for things like this to go through, it first has to pass through the House and the Senate. But if either the House or the Senate can't come to an agreement, it just goes nowhere. Now, keep in mind, that does not mean it's impossible for things like this to happen, but it's unlikely if Congress is not fully unified towards one side or the other. And lastly, here's where things get good. Let's take a look at how the stock market has historically performed with a split Congress. And we could see if historically one side is more profitable than the other. Because once I started looking into this, the answer might surprise you. Now, obviously, past results are not always going to be indicative of what actually happens, but historically, the highest returns have come from a Democratic president with the House and Senate split between parties. That had an average annual return of 13.6%. Now, a close runner-up to that was a Democratic president and a Republican Congress at 13%, and that nearly tied with a Republican president and Congress at 12.9%. Ultimately, what it seems to favor is that a divided Congress is good for the stock market. And if you're concerned about stock market returns, it's more opportunistic to pay attention to what's happening in the House and Senate than it is the presidency. Like, the highest average returns of the stock market has occurred with a divided Congress at 17.2%, which is much higher than just a Democratic or Republican Congress alone. So really, at the end of the day, the presidency has much less control over the markets than we think. And really, we should place a bigger focus on the House and the Senate and making sure both sides are evenly represented, not necessarily focusing on one side versus the other. But given all this information so far this week, this is why we've seen the stock market go up so much in price. A clear outcome is beginning to take shape that would still favor business, lower taxation, and less regulation on tech. And that's causing people to feel much more comfortable throwing their money back in the stock market. Or really, in other words, more people are buying right now than they are selling, and that means the market's green, which is good. Green is good. I've just always maintained that the best thing you could do is focus on the core principles that I talk about non-stop here in the channel time and time again, and that would be keep buying, keep investing long term, and don't panic. Also, it's important you don't sit on the sidelines waiting this one out either. I've seen it a million times. If you wait to buy into the market because you feel it's too high, then most likely you're also going to wait out the best buying opportunities because you're waiting for it to drop even lower. Just get in the habit of buying consistently and do not try to time the market one way or another. Now, as far as what you could focus on, when it comes to myself, I've always made sure to live below my means, save as much money as I can, invest consistently long term, and work diligently throughout the day so that way I'm not wasting time. I believe that those habits have a much greater impact on our day-to-day lives that all of us can directly control immediately. So I know this video might not be anything you didn't know already. I get it. But sometimes it's important to revisit the basics, understand the psychology of investing, understand why the stock market is going up, and give you peace of mind to know that long-term everything is going to be okay. We could very well continue to see the market go higher and higher, or maybe it begins to drop down once the uncertainty of the Senate begins weighing in. But either way, you better be buying. And besides that though, we have some other somewhat breaking news over the last 24 hours because yesterday, the Fed left interest rates unchanged near 0%. And they also confirmed that they plan to keep them there for the foreseeable future. Jerome Powell has been an advocate of more stimulus to help our economy, and it looks as though at some point, another stimulus deal will be reached, even if it happens in smaller bills. If that happens, that should hopefully help stabilize our economy until it's ready to safely reopen. And then on top of that, it's crazy, we just hit another record. Mortgage rates have hit another all-time low for the 12th time this year. CNN now reports that the average 30-year fixed-rate mortgage is at 2.78%, which is the lowest level ever recorded in 50 years since the survey started. Apparently, rates might even continue to drop even lower, which is fueling the housing market to continue to rise even higher and higher. But yeah, I'll save that one for another video. So there you go, there's the update so far. I really hope you enjoyed it, and regardless of how this plays out, just stick with the normal plan as usual. You're gonna come out of this okay.